This is Coach Jason Ballard, and I'm a business wingman. Over the years, I've learned a lot from working in our family construction business, serving as a senior officer in the United States Air Force, and running 12 different organizations around the world. Many people helped me get to where I am today, and it's my mission in life to serve as a personal wingman to others. That's what this podcast is all about, providing knowledge, tools, resources, and mentorship to help people soar to their highest altitude. And welcome back to the Soar Higher podcast. I'm your host, Coach Jason Ballard. It's a real pleasure to be with you today. Got another great show lined up for you today. Today, we're going to learn about money. We're going to learn about how to multiply your wealth and live a life that you really want to live, a life that you may be dreaming of living, and you're just struggling to maybe figure that last missing piece out. We've got a great guest on the show today that's going to walk us through how to actually do it. And he's actually literally wrote the book on that. Today, we have the privilege of Dave Wolcott being on the show today. And so let me tell you a little bit about Dave. He's done some amazing things in his life, and I want to touch on those here as we intro him into the show. First off, Dave's a veteran. He was an officer in the United States Marine Corps for around 4 years. So, first off, as always with veterans, thank you for your service. Dave is also a serial entrepreneur. He's owned numerous successful companies and is currently the CEO of Pantheon Investments, where they help people become wealthier, help them figure out the secrets that they need to help them achieve whatever they're describing as wealth for themselves. He is also a podcast host. He's an author of an awesome book called The Holistic Wealth Strategy. Dave, welcome to the show, my friend.
Great to be here, Jason. Really appreciate the opportunity.
Yeah, and we first off love veterans. Obviously, I'm a veteran myself, so anytime we get people on the show, especially that are veterans, it's always just kind of extra special for me, for sure. And I hope that comes through in the podcast, and the listeners, kind of see that and feel that as well, because veterans are very special people. They make sacrifices that most people, couldn't even fathom or even understand. And so just thank you for your service. The Marine Corps is not an easy service to serve in. Not that it's a bad service. It's just, very demanding. And you make an immense amount of sacrifices, you and your family, I'm sure, have. So thank you on behalf of all of our listeners and everybody that tunes in. Thank you for what you've done for your country so far.
Thanks, Jason. Really appreciate that. And likewise, thank you for your service as well. I think veterans are a special breed. We learn a lot of different things. We go through a lot together, but freedom is not free. And it's really important to, substantiate the values, that this country was founded on, and, try to take those out into the world and create bigger impact. So appreciate it as well.
And thank you for, your service, and then going on into the world and continuing to serve people in other ways, help elevate other people, and serve and contribute to a better society around us. And I think it takes a special person. Not everybody can or may be willing to do that. And so let's dig in. Talk to us a little bit, Dave, about kind of your background, coming out of the military, getting into the civilian sector, and to the point where you are today as a CEO of an investment company.
Yeah, sure, Jason. So it all started for me. I was raised in a middle-class family in Connecticut, probably like a lot of listeners out there. And I was told that the recipe for success was go to school, get good grades, you're going to get a job, and life would work out, right? So I kind of followed down that path. As we talked about, I went into the ROTC program and got into the Marine Corps. And a few things that I really loved about the Marines was, not only did it, really challenge, yourself, right? But you got to work with an amazing group of people, got to travel the world, and also learn skills that they really just don't teach anywhere else. Things such as leadership, teamwork, and integrity, right, that are so important. And after I transitioned out of the Marine Corps, I got into corporate America in the tech industry. And I was quickly really frustrated with losing that same sense of mission and purpose, that the Marine Corps had. It was all about producing quarterly results no matter what. So I started becoming frustrated very quickly with corporate America. And at the same time, we started building a family. We actually had an 18-month-old. And then on October 24th, 2000, my wife and I literally had triplets and quadrupled the size of our family like overnight, which was just, I can assure you, it was a completely, mind-blowing event. But the first thing I did, Jason, was, I was thinking in my head, how am I going to be able to provide financial security for now, 4 children, right? I mean, you just moved the goalpost out like a mile down the field here.
Wow.
So I went to see my financial planner, and, he told me what every other one did, which was just, look, max out your 401k. You've got kids, put your money in 529 plans. And, now you have to hit this big, accumulation number, right? You have to kind of go for that. So the entrepreneur in me at that point became just really frustrated with, I think I can do better than this, right? I can get better returns. I can get lower risk, and there's got to be a better solution to this. So at that point, I kind of got on this obsessive journey to figure out how the top 1% are actually building their wealth, because I knew it wasn't actually as a retail investor in the stock market. So I started investing in alternative assets, everything from, commercial real estate, raw land, oil and gas, office parks, retail, you name it. And at the same time, I started a business on the tech side of things, a tech consulting business that we ended up kind of taking full cycle. And if you've read Kiyosaki's cash flow quadrant, it was all about, right, being a business owner and an investor on that right hand side of the quadrant, because that was the place to be, most efficiently positioned for taxes and really building wealth. So fast forward 20 years. And I've taken all those experiences of my learning lessons in investing, growing businesses, and really putting all that together into the book called The Holistic Wealth Strategy.
Wow. That's pretty amazing. So I want to go back to something you said that I want to make sure we're clear on, because sometimes I wasn't clear on this throughout my career until I understood some things differently. And I would have think that a lot of the listeners would be in the same boat. And that is, traditional investing, 401k, 529 plans for the kids in schools. There's these kind of, I'm going to call them cookie cutter kind of investment stocks, bonds, packages, of mutual funds, things like that. What made you think, when did you realize, like, yeah, that is not the best way? Like the most wealthiest, most successful people in the world don't do those things. When did that happen? What made you decide not to do that anymore and to look at other options?
Yeah, I think the first light bulb moment for me was reading Kiyosaki's books. And keep in mind, this is actually in 99, 2000, when they
Yeah.
literally just came out. So Rich Dad, Poor Dad, cash flow quadrant, but really understanding that cash flow quadrant and to really understand how money works, because we're not really taught this anywhere in school and life, anywhere. So once I understood, how money works, right, it's a different game that you can play. But 95% of us out there are all taught by traditional financial planning that, you're supposed to invest in stocks, bonds, and mutual funds and build a 60-40, portfolio. And that's your financial plan.
Wow. Well, I certainly am a fan of Robert Kiyosaki. Read his books as well, and they're all just spot on. I mean, it's so enlightening to read. Rich Dad Poor Dad was the first one I read a number of years ago, and it really clicked my mind to think differently. And I think that's important, is because there's so much especially in today's day and age with, the social media platforms and all the communication channels that are out there, and people are seeing all these things, scrolling through stuff, they see these things and they're just led to believe, oh, that's what people are doing. That's what people, they're unaware of probably 80% of the options to them out there. And once they become aware, as Robert Kiyosaki says in his book, right, there's two types of people in the world. It's not about rich versus poor. It's not about the haves and the have-nots. It's about the informed and the uninformed. And so I think that's kind of what you're really hitting on here, right? Is how to be more informed to figure out what's the right thing for you. Is that right?
Yeah, that's a key component, right? And that's actually one of the phases in our 5-phased approach in the holistic wealth strategy, is to really increase, I call it really your IQ. So if you were to think about it, as a formula, right? It's that your net worth equals your financial IQ plus your mindset IQ plus your relationship capital and your physical capital. So when you put
Wow.
all of these things together, right, that's actually what you can achieve. And if you follow, the masters in the games, billionaires, right, this is what they're doing. This is what they have mastered. They've mastered their mind. They have incredible top level relationships that open, new doors for them. And they're constantly learning. You have a growth mindset where you're always learning about new opportunities, new things, and not being the smartest one in the room all the time. You want to surround yourself with smarter people so that you're always on this journey of learning.
Clearly, you are an expert in this space, but more importantly, what sticks out in my mind with you and what great work you're doing out there is the passion behind it. How in the heck did you ignite that passion? What happened that said, this is what I'm going to do. This is my focus. This is what I'm good at. This is what God made me to be. What was that moment for you that really ignited that and got you passionate and fired up about it?
Yeah, great question, Jason. I think it's really an evolutionary process. And I love how Peter Diamandis actually calls it your massive transformational purpose, your MTP,
Hmm.
right? So when you can actually figure out in life what you were put on this earth to do, I mean, you will be so motivated and fired up every day to get out of bed and make an impact, right? And
Yeah.
work towards that purpose. So I think for me, something around, really being able to provide for my family, at that point as we were raising a family was just so paramount to me. And I took so much responsibility in that, that I really wanted to, get control of that and create this purpose to be able to support that. And now, the ability to do that with Pantheon at a larger scale with investors and just creating the impact and writing the book and all of these other things, that's really what drives me, right? It's not the financial motivation, right? That's actually only basically a barometer of your success. But I'm
Yeah.
driven to try to create that other impact for other people, because I think a lot of people, I mean, Kiyosaki said it really well, right? Financial education, most people just do not have this, or they just listen to the financial advisor and think that, hey, that's, I'm good, right? That's the only
Yeah.
thing. And they're not learning that there's other alternatives, there's other possibilities of how, you can grow your wealth. And if you think about it, it is truly the game of capitalism. I mean, it really is, right? So how are you moving the pieces around on your chessboard to get to that next level? And if you have your, massive transformational purpose lined up, I mean, you are going to, definitely beat your competition. You're going to be fired up and you're going to be doing good things in the world. And then it comes back to you in spades.
Yeah. I couldn't agree more, Dave. There's one truth in the world that I've learned that it kind of connects to this, and that is that you're either in control or being controlled, right? And what you're talking about and what you're doing is giving people control, freedom to make choices, to understand the broader context of where they're at, what they're trying to achieve, and potentially the best options for them to navigate through. And so that kind of ties into your book, the holistic wealth strategy. And there are kind of a 5-phase approach that you walk people through to help them go through that process. Talk to us about the book. Talk to us about this 5-phase approach. Like, what is it? Why did you create it? And how does it work?
Yeah, so I was really thinking about, again, trying to solve that problem of, how do you really build wealth? How are the 1% building wealth, right? And this isn't for, your average investor who wants to just work with their financial planner. I mean, this is for people, who want to make 1 million, they want to make 10 million, they want to make 20 or 100. Right. This is really the path. And what I discovered throughout my journey, Jason, is that it's really building wealth is a process, right? It's not a one particular product, right, that you can
Right.
get on Wall Street, right, and get that silver bullet. So the overarching theme around the holistic wealth strategy, the first thing that I talk to all of our clients about is, what is your vision statement? Right. And we live in this reactionary world where, we're just busy, 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 go, go, go. And we don't spend enough time really thinking about where is it that we're heading. And the first
Yeah.
thing, if you were going to go on a road trip, first thing you're going to do is set your GPS and coordinates, or why don't I speak, in flight terms, right? The first thing we're going to do is work on our navigation and understand where we're going. And a great way, here's a great way for the audience to really kind of think about this is just, take a moment, or, when you're in a peak state, after you've exercised, you've meditated, right, and you're in a really good state. If you had $1 billion, what would you be doing? Where would you be? And who would you be with? Right? That's a great start for really kind of getting some clarity on that vision, because if you don't have a target, you're going to miss every time.
Well, then the question is, well, why are we doing what we're doing? How do we know we've achieved what we want to achieve in life? If you don't know where the goal line is, and you don't know where you are marching towards that goal line, you could be going the opposite direction. You could be moving, out of the stadium and going a whole different direction you don't even want to go in. But how do you know um, when you reach that level of success without clarity and vision? It's like, walking in a dark haunted house and you don't know where you're going, trying to feel your way around. And how can you ever be successful doing that? Right. You can't.
Yeah,
All right.
exactly.
So phase
Exactly.
one is about clarity and vision. So once you helped people understand that, walk them through that process, and they have some clarity and they have a vision of kind of what the to be state is, then what's the next step? How do you
Yeah.
move
So
them forward?
the vision, really is the underpinning of the entire framework. And the phase one is really focused on mindset, right?
Hmm.
I just think about what's the difference between someone like Elon Musk and the person you went to high school with, who might be in the same town, in the same job, with the same circle of friends, right? It's
Hmm.
all mindset, right? And having this growth mindset, like I said, of always be learning. How many times do we go home for, say, a family reunion or something, and you tell someone really something really exciting about work or a new opportunity you're looking at, or it could be even a health, something you've learned around expanding your health, and people basically just don't engage with you. They don't listen. They don't want,
Yeah.
because they don't want to listen. And it's really all about mindset, right? So having a growth mindset is absolutely key to building your wealth, right? And having this bigger vision, and then from there we can create goals and habits that actually bolster that mindset and bring you closer towards your vision, versus you taking it away, right? Because you are a product of the 5 people that you spend your most time with, right?
Hmm.
As Jim Rohn likes to say. And you're also a product of the media you consume. So,
That's
if you're
right.
watching CNN and Fox News every day and just, consuming that, it's going to make you think a certain way.
Yeah.
But if you're reading, if you're reading different topics, really understanding new things, you're going to be constantly learning and figure out how you can actually progress towards your goals.
I think that is some of the best advice people can hear, because the world as we know it, at least here in America, there's a lot of concern. There's a lot of kind of unknowns. Are we still in an inflation? Are we going into a recession? Like, what's going on with politics? And now we're talking. Every night I turn on the news, and it's debt ceiling, and we're going to default, and we're going to, the whole world's going to go to hell in a handbasket. And it's a lot of negativity and fear and consternation. And yeah, if you let that get, it's like garbage in, garbage out, right? If all that stuff kind of flows through you, and then by you thinking those ways, your thinking connects to the law of attraction. Next thing you know, there's kind of more fear-based negative people starting to creep into your life, right? Because you ever notice when you go in a place of business, like the people that go to the water cooler and are gossiping about things at work, and all the things that aren't going well, or something they don't like about their boss, it attracts other like-minded people. Negative people attract negative people, positive people attract positive people. And you've got to, and again, it goes back to control. You can control what goes into your eyeballs and ears, and how you're consuming information. You can control who you spend time with and not, and set yourself up for success. I love that. I love that. So what's the next step in the process?
Yeah. So the next step is, once you really have, that growth mindset, right, and you're pushing forward, you're moving into that formula that we talked about net worth, right? So you're enhancing your financial IQ, your mindset IQ, your physical capital, and by the way, physical cap. This is a holistic journey, right? And I know you'll appreciate this as well, Jason. Right? That um, if you don't have your health, right, that's driving you towards your goals, you don't have anything. I mean, how much would Steve Jobs have paid to actually solve his, health problems, right? One of the
Yeah.
most brilliant minds on the planet, and yet he was stopped by cancer, right?
Yeah.
So really, taking control of your health. I actually have a goal to live to 116, and my biological time age right now is actually 10 years younger than my chronological age, right? Because I'm
That's amazing.
focusing on it. Yeah, I'm actually focusing on it. I'm measuring it. I'm investing in it, and I work hard on that, right? So having that physical capital, I think, is going to help you move you towards your goals. And the financial IQ piece, again, if you can just kind of understand, right, kind of a little bit more how Wall Street works, and that Wall Street has an agenda. They want you in their products. So they're going to be selling you stocks, bonds, and mutual funds that all support this bucket that is like a right strategy. But when you start to realize that there's alternative investments, like, investing directly into commercial real estate, into oil and gas, raw land, private debt, all kinds of different types of opportunities, you can start to see some asymmetric returns. But not until you understand that there's other options out there that are available to you.
Well, since you brought it up, um, I want you to talk about some of these other investment areas. I've got some other questions, but I think you touched on something very powerful. And so, being informed in what other options are out there other than what's, Wall Street may be offering, which, isn't bad. I don't think, Wall Street Wall Street's made a lot of people a lot of money, helped them be successful, but it's not the only option. It may not be the right one for you. In the world of everything's personalized and customized to you, it just may not be the best choice for you based on your goals, based on your situation that's unique to you. Let's talk about, you named a few of them: oil, gas, real estate, private debt. Talk to us a little bit about those and how people can view those as investment channels. Like, when you think about private debt, you're like, what? how do I invest in that? Like, who do I go to do that? Like, what is that, and how can I make money off of that? That would be new to a lot of people. So walk us through some of that.
Well, I think this all starts, Jason, again, with the education and the fact that these opportunities have typically been reserved for the ultra wealthy. Okay.
Yeah.
So once the Jobs Act was passed, you can do something called a syndication, which is
Yeah.
essentially like crowdfunding with a bunch of investors to go and purchase, say, a 50 or $100 million real estate property, and you get to co-invest alongside other investors with some general partners, and get what we call asymmetric type return profile, which is lower risk and higher returns out of that. So these opportunities are primarily available for accredited investors, and most people might not even be familiar with what that is. But an accredited investor is someone who's making 200K of income for the last 2 years, or they make 300K jointly with their wife, or their spouse, or they have over $1 million in assets outside of their primary residence. Right. So, once you have that threshold, the SEC says, you can invest in these types of private opportunities. And when you invest in these private opportunities, there's really a myriad of, what I would say are really like multipliers. Right. So we can just talk about like multifamily property. So apartment buildings, for instance, as an explanation. So in a multifamily property, let's say we're investing, 100 million into a property. The way the return profile works is that you start cash flowing like on day one, right? You're
Hmm.
starting to receive cash flow distributions. Those distributions are actually tax free because they're offset by what's called bonus depreciation, right? So
Yep.
so now you're making your cash flow, you're offsetting the cash flow with your depreciations, and then typical business models is we'll go and renovate these types of properties, and then once you improve them, we sell them in 5 years for a profit, and that's when investors can make profits on the back end as well. So I mean, we've typically over the past 10 years, we're seeing pretty much, I would say, around 20% type of
Hmm.
average annual return on a lower, like I said, a lower risk basis, much more tax efficient type basis. So that's quite compelling. The oil and gas, for instance, we have a large fund that we're working on now, and part of this is all about understanding how taxes work and everything. But if you've got high income W-2 earners out there, and this oil and gas fund, you can actually offset your W-2 income with your investment. 100% of your investment is actually tax deductible, right? So
Hmm. Wow.
that's quite significant. And
That's
then you start
powerful.
making, cash flow returns and some upside to that as well. And we also have, actually, we just launched an opportunity now that is a private credit fund. So we're taking advantage of all of the basically all the turmoil in the banking sector, and now they're tightening all these standards and not lending as much to small businesses that are trying to grow. So in this case, we can offer private debt, which is called merchant cash advances. So we're basically giving an advance to businesses that are scaling. They pay it back with an interest rate, and pay a premium on actually the interest, but it helps them grow their business
Yep.
and get the access to capital much quicker. And we're seeing very healthy returns on that platform as well.
Wow. That's amazing. I don't think most people are even aware of these types of things. Like when you talk to people and you get introduced to somebody and they're looking to, say they got an inheritance, or, they cashed out of one thing and are looking to, put something, a lot of people are nervous of the stock market. Things are aren't really popping like they used to be a few years ago in there, and they get nervous, jittery, and they want to, and you meet somebody for the first time, you start talking to them, and you kind of start taking them through your 5-phased approach, and let's assume they are somebody that's ready to move forward and take advantage of one of these options. I mean, how many people are familiar with this stuff? How many people are uh, how does the conversation start and how does the conversation end?
Yeah, I think I think the first step really, Jason, is, people who may have read Kiyosaki or something, or they understand passive income investment thesis, right? And
Yeah.
understand how to build passive income. These are typically the folks that really understand this. And then, once you kind of, again, you start learning, there's more and more books and podcasts and resources available now, to really start getting into it. And, once you kind of see the power and the performance of it, I mean, I've done everything. I've liquidated my 401k. I paid the penalty on that.
Hmm.
I 3x'd my money in a fraction of the time from doing that. And, you start to see how well these opportunities perform on a risk adjusted basis. And this is, frankly, Jason, I mean, this is what, high net worth, ultra high net worth family offices, centimillionaires, this is how they're investing, right? They're investing
Yep.
privately in assets. They're getting into tax efficient assets really to offset that income, because, taxes are your number one biggest expense. So trying to,
Yep.
offset those is really a huge part of the strategy. And then diversifying across some of these different asset classes, to support your goals. These are what, these are what these folks are investing in.
Yeah. So they come to you, you go through clarity, you go through vision, you make sure the mindset's right, they're focused, they're clear, and you kind of take them through this process that you just talked about, all these different options. And you named off, 6, 7 of them. I'm sure there are many more of different things they probably didn't know about. Now they do know about it. And then you kind of start vetting them in. So what's the next step of that process? How do you move them through the other phases? What's next?
Yeah, so in phase three, we like to talk about really building a team around you and creating an infrastructure for investing this way, right? So we're not only trying to multiply our wealth, but we're also trying to protect our wealth, right? So one pieces of the infrastructure is getting a proactive CPA. I literally fired 5 CPA firms over the years that I kept paying more and more in taxes. I never knew what my tax liability was. But look, here is the bottom line. If you're a business owner, you could be paying 20% in taxes or less. If you're
Yep.
an investor, you can be paying 0 in taxes, right? That's really the bottom line of what you should be shooting for, on the tax side. And if I could give you a 10% boost in tax savings, and then you add that to that 20% return on, what you're doing in the alternative investment, now you're above 30%. Right. So tax strategy is absolutely key. We want to focus on the top wealth destroyers, not only, multiplying your wealth, but
Yep.
mitigating those top destroyers. We also talk about asset protection here, so that you're buttoned up in terms of protecting your assets. And then we also help clients with another strategy that's very unique that the ultra wealthy use. Banks, corporations, actually Biden himself has like 6 of these policies, which is the infinite banking concept, which is essentially a cash value whole life insurance policy that you can put capital into your life insurance policy. It grows and compounds tax free at just about a 6% rate. You can give it to your heirs completely tax free. It's got asset protection to it, and it creates a reverse tax free income stream as well in retirement, so you can actually borrow against it, right?
Yeah.
So that is a huge strategy around kind of protecting your wealth, and then you have the liquidity of being able to access your capital. So that's a really key part of people building out their infrastructure and portfolio.
Okay, so you build that out, you get that going, then you put some things around them to kind of protect it, right? So you're driving in additional revenue, you're reducing the liabilities around it so they can keep more of the money that they're accruing, and protecting that. I mean, there's, insurance and all that is one thing. I think people having estate plans and trusts and things wrapped around their business and in their personal lives, kind of adds that to that as well. So you got that, it's working. Are they good, or are there more things you got to do with them in your 5-phased approach?
Yeah, so we then move into the fourth phase, which if people have gotten here, a lot of people might say, "Hey, Dave, this sounds great. I've learned a lot. I've got an open mindset to this, and kind of ready to go, but I don't have any liquid capital. It's typically
Yeah.
around 50K is a minimum investment to get going. So people say, I don't have capital lying around. So the fourth phase is all about asset repositioning, right? So over 90% of Americans basically have their capital in two places. It's number one, it's in trapped equity in their primary residence that's earning them zero, or they have it in government sponsored qualified plans. So things like 401ks, IRAs, which going back to your point about control earlier, the government is completely controlling you. They're telling you that you
Yeah.
can't access your money. They're telling you when you can access it. And then they're telling you how much you can take out of it. Right. So I had enough of that control. There's something that you can actually reposition to. One step is to do what's called a self-directed IRA. So you can actually get a custodian that allows you to, transfer your existing IRA assets into this self-directed, and then start to invest in some of these private opportunities. So that's one step that you could actually do. It's kind of a bold move. And again, this is not financial advice that we're providing here, but we actually have a 401k exit calculator.
Hmm.
I went through this process myself and said, look, if I sold my 401k and then I invested in some of these opportunities, I make some assumptions, where would I be? And it's absolutely massive. I mean, I can tell you the high level numbers. If you take 100K in a 401k, you paid 10% penalty. Let's say you're in a 35% tax bracket, so you have net investable 55K, and you invest it in one of these, tax efficient alternative investment opportunities. After 20 years, you've accumulated to a value of over 2 million. And
Hmm.
had you left it in your 401k, that's compounding at a 7% growth rate, it's just over 300K, right? And then
Wow, that's a big
and
difference.
then you have to pay taxes on that, right? So the net is 250K. So, if that doesn't kind of illuminate things, right, in
Yeah.
terms of the
Wow.
overall strategy and kind of get you thinking, then it's helpful to see it like objectively, right? I could say
Yeah.
all these things that I want, but I went through that process myself and then looked, crunched the numbers. And when you see the numbers, you make some conservative assumptions. It's pretty powerful.
Wow. I'd say so. Um, it's almost like you get the feeling sometimes. I've had a few discussions with folks in generally your area, wealth planners, and uh, financial planners, those kind of folks. I know they're different, a little bit different than what you do, but generally speaking, have conversations about these kind of things from time to time, and have some coffees and sit downs, and just talking about things and how they do things and what makes them different. And it's almost kind of like you get the feeling the government doesn't want most people to know about all these things, the loopholes in the tax codes, and how to shelter your money, and like all there's all these options, and you're like, why doesn't everybody know this stuff? Like, why? How are people not informed on this? It's been out there, and it's like it wasn't invented yesterday, and it's you just kind of get the feeling like they don't want you to know, because if you follow these traditional methods, the government makes more money, not you. Is that true? Is that a
You need to be informed, and like I said, I mean, these aren't secrets. I mean, the Rockefellers, I mean, back to their time, right? They've
yeah?
understood, all of these principles. But I think, yeah, it comes down to education, and people just don't understand. But going to the tax code, for instance, I mean. It took me a while to really make a true paradigm shift and understand that the tax code is 6,000 pages. The first page tells you that if you're a W 2 employee, you're going to pay a certain amount in rates. The next 5,999 pages are actually a roadmap of incentives for business owners and investors.
Hmm.
So if you really understand that, you're actually partnering with the government. So in the case of
Huh.
oil and gas, for instance, we need energy supports our national defense, right? It supports our GDP, no matter what industry you're in. So the government actually gives you that tax incentive. And so you're partnering with the government and you're investing where they want to. The government wants
Hmm.
you to support housing in this country. So apartment buildings, right? They give
Yeah.
tax breaks there because we have a shortfall. We still have a shortfall of housing across the country, right? So it's really understanding it and then making that paradigm shift. And like I say, you do have to put yourself in a position to be able to optimize these. And typically, business owners and investors, are best situated, right, from a tax standpoint. And then the more you learn about this, you see how amazing the opportunities really can be.
That's an interesting perspective. There are some people that certainly feel, yeah, the government just doesn't want you to know. But you bring up a really, really great point. Again, that's part of being informed. And being informed is knowing the 5,999 pages of stuff that's in the IRS code book that really, the government really your enemy? Well, depends on how you look at it. Depends on how you're positioned. And if you're a straight up W 2 employee, the highest, amount of expenses, as you said, is your tax bracket. You pay the highest amount of taxes as a W 2 employee. Whereas if you look at these other opportunities that the government provides to partner with them, different ball game. It opens up a lot of different things. And so, interesting way of thinking about things. That's really cool.
Yeah, it is. It's very different, Jason. It's a very very different way to think about it. And the more you do think about this, you can see that it's a completely different game that's being played.
Yeah, absolutely. All right, what's number 5? Once they've gone through, done all these things, how do you end this? How do you put a bow on it? How do you make it happen?
Phase 5 is really all about taking action. And here we want to build massive passive income. So we do this by investing in these, alternative assets directly. We're bypassing Wall Street to invest directly in Main Street and get better returns at a lower risk. We already identified, a number of the opportunities examples earlier, but maybe one thing I could do to really help crystallize this for the audience is just kind of give you a high level example of,
Yeah.
one approach versus this approach. So if you take the traditional financial planning model, right, they say that you should accumulate a particular number to get to support your expenses and your lifestyle, right, in retirement. So let's just say that you had accumulated 4 million, okay, in your portfolio, and then they further go on to advise that you can withdraw 4% a year off of that, right, and we'll keep it at 4%. I think it's starting to become even less than that, but for now let's go with 4%.
Okay.
So that would give you 160K of income at retirement, right? But the biggest thing that they're not really advising you about is that you still have to pay a lot of the taxes are going to be taxed at ordinary income tax rates. And you likely may have less deductions at that point in your life. So your 160K, starts to become maybe more like 100, 110K that you're living on. And you
Hmm.
might be thinking, wow, I saved a lot, I did pretty well, and the way inflation is going, that's pretty tough to live off of, right?
Yeah.
So now, if you compare that against the strategy that we're talking about here, let's take the same amount. Let's take 4 million, and you're invested in a dozen, 15 different of these syndications that are providing an 8% cash flow. Okay. So that 8% cash flow now puts you at 320,000. You've actually
Wow.
doubled, your income, right? That's coming in. And furthermore, you're not paying taxes on it because all the alternative investments are actually tax efficient. You're getting enough depreciation to offset the income. Okay, so now you've literally doubled that. You're not paying the taxes. And then what's even better is those opportunities still have appreciation growth, of at least 10% a year. So instead of killing your golden goose, like in the first example,
Yep.
your golden goose actually keeps getting bigger. And that's how you create legacy wealth. That's how you're going to keep up with inflation and all the other costs, right, that are out there.
Yeah. Wow. Thank you for breaking that down. I mean, that was a great example. I think and you did it in such a simple way. Sometimes a lot of experts, financial planners, wealth, people, they're so focused on the numbers and they make it confusing. So one thing I love about you, Dave, is you're able to just break this down into just easily consumable, common sense kind of ways. And so, Dave, as we kind of wrapping up the show here, again, thank you for being on the show. You have really opened up a lot of things for people to be thinking about and be considering, and it's all about control. Put more options in front of you, be more informed so you can make the best decisions for you to reach the outcomes or level of success that you want to reach, live the way you want to live, and achieve some type of dream or some type of something that's important to you. So as we kind of wrap up, Dave, what are the top three things that you think are most important that people can take away immediately from this show that they can implement as next steps? What are the top three things that you think can help people?
Well, great question. I would say get super clear on your vision statement, right? That's absolutely number one, and
Okay.
understand, where it is you're going. Sit down with your spouse and your family and get really clear on that. Number two is to think of yourself as an asset. You are your greatest asset. Okay, I've always gotten the biggest ROI when I invest in myself, my health and my education and my learning, whatever that is. So think of yourself in that way and try to make investments towards that. And the other thing I'll say is, buy the book. Go check out the book, the Holistic Wealth Strategy. And something else, to support our shared cause, Jason, for veterans, is we're actually taking all the proceeds of the book and they're going to thefund.org, which actually helps critically wounded veterans. So we're really proud to support that charity. So if anyone does that, they could go to our website, which is pantheoninvest.com/wealth hyphen strategy. And there you can get actually free access to some bonus materials. We have that 401k exit calculator. We have a passive income calculator and some other goodies there. But there's links to the book as well.
Love it. Love it. Doing great things for people, help empowering people, filling their brains full of really powerful and enabling knowledge that can help them make powerful decisions, and giving back and supporting our veterans. I can't think of a better cause than to support veterans that are making the sacrifices and being injured and wounded, mentally, physically, and in all kinds of different ways. So, Dave, thank you so much for being on the show and your time. Obviously, a very busy guy, but also thank you for all that you're doing. Obviously you've served in the military, you're dedicated your life to serving others and helping them be successful. And I can't think of a better cause. And then thank you for, your work in the community to help other people in need, veterans and other folks alike. And so please download the book, buy a copy of the book, go to Dave's website, contact him, reach out, learn more. He's a wonderful guy, good guy, trusting, down to earth, just good guy. The Holistic Wealth Strategy from Dave Wolcott. That's it for today's show. Please tune in for another great show, kind of piggybacking on today's conversation about your health and your wealth. We're going to have a doctor on the show next week, and we're going to be talking about how to think differently about your health, how to set yourself up better and live an ultimately better life. And so you won't want to miss that. That's all for today. Hope you have a great week, everybody.